Welcome to Crypto MC. My name is Rudo, and today we're going to be talking about yesterday's game plan or battle plan. We want to see Bitcoin go to $80,000, and we had a really nice reaction last night, I would say, at around 68. So I want to discuss that with you guys today. See how we can capitalize on that. And then I've got a special guest in the background as well that's going to be giving us some Elliott Wave magic. So you know what to do. Hit the like, hit the subscribe, and comment if you're live. We've got about 10 people joining in right now. So make sure to say hi and let me know where you're tuning in from. Okay, now let's cut the music. Let's get serious. Let's quickly recap yesterday's battle plan. So the argument yesterday was that, and if we quickly, I'll work it from my Twitter page. Probably going to be the quickest way to get to that. Is that we were looking at Bitcoin, and I'm going to do this. Let me just do this. Let's do this. We were looking at Bitcoin being range bound, so you could clearly see the upper, the lower end of the range. And we could see that where the delta is and the point of control is that the bulls took control of price within Bitcoin's range. And from this point onwards, the expectation was that we were going to reject at some of these levels, come back down and test that $68,000 level. And I explained to you guys that where we were yesterday at 71.5, it's a strong resistance for the bears. And there's a nice short opportunity to grab that short. I'm going to make the screen a little bit bigger. And what we will do is it will trap a lot of bulls at the high, and we will probably go and test the 68K level before we break out. So you can shorten the area yesterday when we were at around 70,000. And then we want to see the market rally strong from that point onwards. So if we rewind to where we are right now, let me just... I'm missing Peter. He's not here today in the background pressing all the magic buttons there. So, yeah, Peter, you must come back. So if you look at where we are right now and what happened yesterday, you can clearly see that from the 4-hour point of view, price did reject at these highs, and we saw the big correction, and we tested that 68K level. So the play for me is as follows. Trend, we still in a larger downtrend. That hasn't changed at all. Bitcoin's still in a larger downtrend, and the anticipation is that I am personally looking for upside to the supply ray, because that will fill the inefficiency in price created, and it will put all these sellers in this area where the big majority of the volume was created for the sell-off. It will put them under pressure. The market does not want to take passengers along for the ride, so it probably squeeze the bears first before we have our last leg to the downside. In addition to this, we'll also have the divergence calculations that we can see, and statistically, when we do have the wave, your wave 4 before we go make a lower low, gives you the probability that we'll move into these levels. And the calculation for that then says that between 78 and 83 would still be the area where I would anticipate divergence. Also knowing that we do have, at that stage then, hidden bearish divergence, meaning if you look at where price is and we compare that RSI pivot, we've already got a higher high on the RSI and we've got a lower high. So any reason on the higher time frame, the daily, the weekly, where I'm looking for right there, to short the market, which I have not received in any of these opportunities. These are just waves, in my opinion. Any reason to short that market, that's what I will try and take to try and drive price down. Now, the interesting thing is we do have an Elliott Wave guru with us in the backstage. And the first question that I will be asking him is to try and tell me what is his assumption of this kind of wave formation, because it's not an impulse, not to do his work for him and let him answer it, but there's certain rules. If we're trending 1, 2, your 4 can't go below 1, those kind of things. So we've got an uptrend, but we're overlapping the highs and the lows, so it's definitely not an impulsive move. So I want to try and hear what his take is on that, as well as see if we can have an idea on how, let me just delete all these brush strokes, on how the bigger picture looks regarding the Elliott Wave projections, meaning I've got the charts marked out on the fashion that for my bias, I'm looking for a 4 on the larger wave still. And the 4 means that whatever happens there, we need to be above there. And we so far down the line, that could get skewed, and I could be wrong. So I definitely want his take on this, because if this is the beginning of something different, we want to be wrong fast, and we want to be right long enough so that we can make some really good gains out of the market. Okay, so closing comments from me from yesterday's analysis is that I am hopeful, personally, that the upper end of this trend, so if we mark out the support and resistance levels for you guys, that the upper end of this range ends up becoming a trend, taking us to these levels. So that is the hope. And this would have then been an amazing Wyckoff-based trend within range, which on a Wyckoff point of view would say that this is your phase B, starts around these levels. Okay, phase A is when we sell off. Phase B, this would then be your phase C, your shakeout, or your shakeout out of the range. And then from this point onwards, this would probably be a low liquidity spike. But the argument is that phase D is normally trend within range. There we go. Let's mark that out. Phase D, trend within range, with the idea is if we can hold on the outside, turn this 70,000 into support, breakout, turn it into support, we will have phase E, which is then the markup phase that will take price then to the last time there was balance, meaning the last lateral range. And this would be the last lateral range, meaning that the argument is I want to try and see if I can get price to fill, let's move this over, the gap left between this range and this range, meaning trade in here in a trending fashion. So interesting times. Let's see how the market's going to move. But yeah, morning LTech codes. It's about 50 people joining in live right now. It is bear market. Definitely the views are low. People are feeling frustrated, and that's it. But let's bring in our friends. So hello, Matthew. How are you doing, buddy?
Hey, good morning. Morning, everybody. Pleasure to be with you again. So interesting, your views on the market, because you come from a different angle completely, and yet I believe we come to the same conclusion. So when you're ready, I'll take a look at my chart.
Yes, I'm going to bring up your chart. Let's do that. So it makes for an interesting point when we come to the same conclusion, because I feel more comfortable if somebody can tell me where I'm wrong. Because then at least, the majority, if everybody believes what you're doing, you can sometimes be the one that doesn't know where it's right. So hopefully you have a counter strategy for what it is that I'm seeing as well, because fingers crossed, I don't want to be wrong. I want to make money. That's the main idea. But over to you. Let's see where you are right now.
Yeah, I agree with you completely. When there's too many people thinking it's all going one way, then it's pretty clear it's probably going to go the other way. So if there's too much agreement, then there is a problem. But I think at the moment, we are. The thing is with Elliott Wave, it isn't perfectly or absolutely predictive. In fact, nothing in trading is perfect or absolute. We're in very volatile times, obviously, with this war going on with Iran at the moment, with interest rates, with inflation, etc. All sorts of ingredients in the mix there that can throw things very, very quickly, especially, Trump said that there's going to be 5 days of quiet, I think, before.
We're going to be back to business.
Yeah. So, and the market's jumped on that. And actually, we know a lot of people jumped in just before that news, which was a bit suspicious. But we need to think beyond that and try to think what's going to happen next. So we need to think about the fundamentals as well. We're looking at technical analysis always, but fundamentals obviously actually usually fulfill the technicals that we're looking at. And the interesting thing about Elliott Wave and Wyckoff, they're quite closely related. You're looking at chart patterns which aren't, as I say, 100% predictive, but you're looking at the odds really.
Yeah, as at a fractal nature, you know, what could potentially happen if it looks this specific way.
I mean, when we see just briefly, when we see a pattern like this, you know, obviously a big strong down movement, then a sideways overlapping slight upward movement. You know, it's obviously, it looks like bear flag. Lots of overlap there. It doesn't look impulsive, as you say. So we would expect the next move down. Now, I personally think this is probably some kind of WXY. It could just be a simple. It could be a simple ABC, but actually no. I think it's a WXY. So just put very briefly and quickly.
Just pause and explain to the guys what's the difference between an ABC and a WXY. Why would you say
ABC? You can have you know, a zigzag correction, which would be five waves followed by 3 waves, then followed by 5 waves. That's a 5-3-5. That would be a zigzag correction. You can have a flat correction, which would be a 3-3-5. So it's 3 waves followed by 3 waves in the opposite direction, then followed by 5 waves. So there's subtle differences.
Just the nature and how it corrects. That's basically what it does.
Yeah, absolutely. So I've already put my W in the wrong place, which is quite good. So when we have a WXY, it's slightly different. So a WXY is at 3-3-3. So I just talked about a zigzag being a 5-3-5. A flat correction is a 3-3-5. The W correction is basically a double correction, which is a 3-3-3. So we have here, I'll just put in very briefly on the W so you can see. So we've got basically an A wave up, which is probably in 5 waves. Then we have, I think, a B wave down, very corrective, typical B wave down there. I mean, it could even be a WXY within a WXY. It's hard to say, but it looks like an ABW. Then we have, you need to look on shorter time frames to look for the breakdown individually, because next wave is itself made up of 3 waves. Sorry, let me just make that a slightly larger X. So you'd have a WX, then we have an ABY to the upside. So I'm doing this just to show how it fits so beautifully with what you've got. And I've had this, you know, I've been following this for my trading. I've been making little profits, doing a bit more scalping, not taking long-term positions at the moment because there's such volatility in the market. I see little opportunities. So WX and then maybe a Y wave somewhere up here. I mean, I've got it falling a bit short of your 80,000 odd. We could certainly overshoot and go to 80,000 or 80-something thousand, low 80s.
Well,
but basically,
is kind of my bottom parameter.
Yeah, so I've got, that's about what I've got, roughly 78 is the lower level, and we could certainly go a bit higher. This is just an extremely rough trend line I've drawn here, this black line. Thinking maybe we'll go to there. That'll be resistance, overhead resistance, before we head down again. So I'll just move over to a longer term. I might just shrink this chart, probably shows well enough without going to a longer time frame. So there's the all-time high.
Ask real quick, Matthew, maybe we can switch off your camera, because I don't know if it's just me, but the screen is quite blurry. If you go to the bottom of the screen next to the mic, there's a little camera button. If you just click on that, it will just take the feed away, because it might just be that, yeah, and then bring back your screen. Let's quickly see, because I'm struggling to follow your chart. It's very blurry or low resolution. It might be the case. Maybe it's just me. Those watching live, just let me know in the comments if that's the case. I want to make sure that everybody can see the detail on that. Okay. Yeah. Okay, Matthew. But let's continue. Yeah. They say it's really.
You said. I don't know if it's any better, but basically, I got from the all-time high there. Now, there's a couple of ways we could potentially count this. Interestingly, looking at this, just at this chart, you can see here where I've got labeled as the A wave. You can see the spike down. The low point on that, I'll just find the exact level, was 80,537. Now, for me, that will be overhead resistance, most likely. That level there will be the overhead resistance. So where I've got labeled as a potential turning point for Y will be just below that overhead resistance. My target would ideally be about 80,000, 79, 80,000. Somewhere around there will be the target for this little up move at the moment. before the next move down. So you can label it in different ways. You could potentially have this, and I'll just put, I hope you can see because you said it's a bit blurred, but
yeah, it's still a bit blurry, but we can figure out the gist of it because it's a wave basis. So
yeah, just say I labeled it differently here, and started labeling this as instead of an ABC down. So I've got it as a large ABC down at the moment. So from the top, the all-time high there of 125,000 and odd, somewhere around there, I've labeled basically an A wave down, a B wave up, and a C wave down. So the A wave down, we made up 5 waves. So you'd have to look at the internals to see that, but somehow 5 waves there.
Yes.
Or it could just be a 335, and it's most likely a 335.
And then it's 7 waves, if I'm not correct. You count.
Yeah. So if it's a 335, it really doesn't matter too much. It's a correction by the look of it at the moment. But even so, we have to bear in mind the possibilities, the potentials for something different. So at the moment, I'm assuming this is a correction down, and we have, from the A to the B wave here in this area here. Obviously, it's corrective, and actually I traded off of that beautifully because we had a beautiful ABC there to give us a B wave, and you could sell that beautifully, which I did do. Then we had the move down, and we got another corrective move up. So I'm looking to sell the market. You've got to be very, very cautious about buying when the bigger picture here is consolidation before the next probable down move. So from a risk reward perspective, right now is not an ideal area. If we get towards the 80, then you could potentially sell and have a reasonably close stop loss. For me, the stop loss will be just above that level I mentioned here. I don't know whether you can see, but it's basically around the 0.382 level here. So that would be the sort of level I'd look to put a sell in with a stop loss just above. Then the potential for gain will be all that movement down to what I've got labeled as a C wave right down here at this bottom bit here. So all of that movement down as against just a little stop loss just above the 0.382 level there. So the risk reward would be about at least probably 20 to 1. They're the trades that I love. So you lose 1 unit if you lose your trade. You gain 20 units if you win on your trade, or even if you just went to a new low just below that level, which is 59,000. If you just went just below there, the risk reward is still fantastic, still more than 10 to 1 in your favor. So you're not going to get them all right, but as long as you get the risk reward in your favor, and
you're right. I mean, you've got 19 trades to be wrong again, and then you'll still be in break even if one trade goes up.
So that's the big picture, and to try to align that with the geopolitical situation at the moment, because I think we are being driven by the geopolitical events at the moment, not just, obviously interest rates are having a big part to play, but don't forget interest rates are driven by underlying costs, so inflation we're looking at, and with the oil price having absolutely rocketed, it is going to filter through to inflation. I believe we were in a situation of rapidly diminishing inflation. It's just the oil price that's going to rocket inflation short term. But I think once we see resolution with the current situation in the Middle East, I think probably we are going to see short-term peace breakout. And because of that, we'll see the oil price fall back down sharply. And that means inflation will fall back down sharply. That means that they will be allowed to lower interest rates again. Now, bear in mind, the interest rate outlook has changed a lot. We were expecting at one point at least 3 interest rate cuts during 2026. Over the next full year, so into 2027 now, March 27, we're now expecting possibly 1 rate cut. Possibly. The odds are quite small for that. So the outlook has changed a lot on interest rates, but that can change rapidly if inflation changes and we start to see oil prices coming down again. Then obviously the cost of doing business, the cost of transport, the cost of travel, electricity, heating, everything goes down markedly. So inflation will come down. That will give the Fed room to then lower interest rates. And if we do see a sluggish economy, they also have room to start printing money again. I think this will be what's going to lift. And so I believe the assumption that this is just a correction from the all-time high is a good one, based on that scenario I've just outlined. that we should rise then to hopefully to new all-time highs yet again. We will get the alts following as well. And if we're rising rapidly, the alts will actually then begin to change around the dominance of Bitcoin at the moment. So we'll see a reversal of that, and you start to see alts taking center stage. So when we get to the next low, which potentially is around 52,000 for Bitcoin, I will be looking to buy the market. I wouldn't want leverage because, you know, we may dip below 52. So I wouldn't be looking to be leveraged, but I'd certainly be looking to jump long into the market with the expectation that we're going to rise above all-time highs. So from 52,000-ish to go to 125,000, you're looking at 150% gain on your asset without any leverage at all. So you don't need leverage. Leverage just adds risk. And if the market dips lower, you'd be in a lot of pain. So why be greedy? I mean, 150% gain would be phenomenal. And the other thing is with leverage, obviously you'd be paying interest as the market rises. You pay a lot of interest for rollover. So there's no point in putting yourself, you know, at risk doing that. So that's the long-term view. As I say, at the moment, I believe that we are just a correction down and that we will at some point rise much higher. Looking much shorter term, again, I agree with Rudo completely. Just, you know, we've got an ABW, X, AB. I'm expecting a Y wave higher. That would be the end of the correction. That would be, you know, everything that you mentioned in Wyckoff, but also, you know, from an Elliott Wave perspective, it's looking at the crowd view, and basically, you know, people will be jumping into this final wave down, whether it's a fifth wave, whether it's a C wave. They're both going to be 5 waves no matter what. So you had this labeled as a wave 4. I've got it labeled as a WXY, but either way, following it, to complete the move down, you're going to get one more bit, a 5-wave move, and a 5-wave move is likely to be aggressive. And we should get, if we look at a really short time frame, once we peaked out around that 80,000 level, we should then get a small 5 waves down on a smaller fractal, then 3 waves higher, and then we should get the aggressive 3rd wave down. So we should have a warning, an advanced warning to be able to get into the market if we want to go short. But I'm always cautious as well. When we're on the last move down, I believe this is the last leg down before the big turnaround to move higher. You've got to be very careful. So what I like to do is, obviously, I'll work with stop losses. And if it moves into a decent profit, if your platform allows it, I will put a stop loss in a guaranteed profit position. So then no matter what happens, if the market does suddenly rise on some amazing news from Trump or whatever, you'd be protected. But my overall view is longer term, I'm looking to get long this market. So that's my overall take. I'm just looking, for some reason my computer isn't charging. I'm down to 10%. So
it might be the reason why the screen is blurry as well, because your charts are really low resolution at this moment, and it doesn't seem like you have an internet issue because your audio is crisp and clear. So normally if there's an upload issue, it picks it up around that. So guys, I mean, this is the thing about live. We apologize for any frustration, but I mean, the info and the message is crystal clear, and we can see it. So one question that I want to ask you while we're on this topic, and we're talking about that last wave, you've got a Fibonacci relationship drawn on the chart there, and what is the value where you anticipate your C is going to be there, and then any other confluential factors that you might have, like a measured move, you know, the legs needs to be the same.
I mean,
those kind of stuff.
I mean, if it's an ABC move, then most common relationship of C to A is equality, so 100%. So what I just did, and again, has it gone any brighter, by the way? Because I think I have managed to get the power connected now.
It's still a little blurry, but I mean, what we can do is, if you want to, you can coach me through on my screen, and then I can draw it, and then the audience can actually see how to draw these relationships as well.
I mean, if you've got the same sort of scale there, if you can see it at all. I've measured first of all the A wave as 100%, and I just transpose that same measurement to the B wave. So I'll just move over to your screen and see what we can see there.
Okay, so I'm going to bring up my screen, and then let's start with that. So Firstly, I'm on the. I need to go onto the daily time frame. You would suggest, correct?
Yeah, I mean,
Well, that will
either one's
simplify
good.
the
Yeah,
views.
so I measured from the top. I measured from the top to.
So you take it
there,
from
yeah.
there to there,
From
correct?
there to there, yes. So just put
So
your fib
do you
measurement
use
there.
fib extension or normal fib?
Just normal fib.
Okay, so we take it from the top to the bottom, and I'm just going to apply my normal fib settings. Okay, so there's a normal fib. There's 100%.
Yeah, and then just transpose that. Just drag that whole measurement over.
Okay. Bring
Drag
the
it
whole
over.
measurement.
Yeah, to there, exactly.
And then 52,571 is the assumption of an equal wave ABC correction, meaning that
and that is the most common. That's the most common relationship between C and A. So that would be my ideal target. Now, obviously, we could extend further. We could get 1.382. We could get even 1.618 potentially. So we could extend further. That's why we use DCA, dollar cost averaging, and that's why also we need to bear in mind how far it could potentially go. If it went to 1.618, you've already got your fib measurement there. How low could it go?
Let's put the 1.618 in there as well. So I've got those two levels, and we'll make them bright and green so the audience can immediately see where they are. So let's put them in there. And what I'm going to do is I'm just going to invert the fib so that the levels go to the bottom side. Reverse. There we go. There we go. So there's your 1.138 and 1618. So then we're looking at around $35,000 and $24,000 BTC.
So that would be worst case horrendous scenario. And that's why I said I wouldn't be leveraging in this market. And actually, I think there would certainly be, off the 100% level, there would certainly be a reaction higher. Even if it were to go lower later, there will be a reaction higher. And that's why when I do this, as soon as it gets into a decent profit, I then move a stop loss. As I say, if your platform allows, I put a stop loss in place in a guaranteed profit situation with the expectation it's going to go much, much higher to all-time high. But if we did then reverse down lower, where you have your cursor just then, that would be the resistance overhead, would be the current bottom of the down move.
Yeah. So then you're going to have the exact same thing almost as what we've done there.
So if we entered...
Do the same.
So if we entered a short position, we then use that as basically the overhead resistance. We would want to break through that, and then I'd put a stop loss in place. Then just below it would be in guaranteed profit position, and then if the price were then to go lower down to the 1.382 or the 1.618, and of course it can. When we were at 125,000 for Bitcoin, nobody thought we were going to be down to the 60,000, but it happened. And who knows what's going to happen in the Middle East? Who knows what surprises might be in store for us? So we have to take into account all the potential possibilities, however nasty they might be, and just trade protectively, trade cautiously, because we don't want to get wiped out. And if we end up taking smaller profits, a profit is a profit. And I have a very high profit to loss ratio. It's actually above 90%. And that's just because I trade cautiously. Very often I don't take massive profits, but I trade cautiously. And that's the way I think we should, that's the best way to go.
And if you look at this, if we look at the previous bull cycle, just to look at statistically where we retrace, this is roughly Bitcoin at 5,000. We had Bitcoin, the COVID drop took it to about 3,800. That was the low. So if you look at the statistical relationship between a bear bottom and a bull top, normally what you'll find is your 618, your 786, and your 887. Those are really good support levels for the reaccumulation after, an emotional market cycle completion, meaning we're going from disbelief down here all the way to euphoria, I'm going to be rich, and then back to anger, and then, disbelief again, and then euphoria. So when you complete those levels statistically always get hit and turn into support levels. And it's not just for Bitcoin. You can see this for any alt going through an adoption. So if I load a chart, let's just do a test. Coin that everybody loves right now, we can talk about is Tau. So let's look at Tau real quick. So I'll quickly just expand it, go to the weekly time frame, and then if we have a look at this is, well, it's not the right one. I'm going to have to look at let's look at Solana as a good example. Let me just quickly load the chart there. Solana. Once you go from yet again from a low to a euphoric level, the levels where accumulation picks up, you can see your 618, 786, and 887. Those would be areas. And Solana at this stage turned that into resistance and then reclaimed it before we move. And, so those will always be the case. We can probably look, I'm just going to go to Sui as an example. Sui was a really popular coin at some stage. Again, emotional market cycle, take it from the bottom to the top. Those levels, if you want to go for new all-time highs, those are normally the areas where price goes through that. Another coin, let's have a look. Optimum. I mean, I was big on OP at some stage. Let's load that one. Let's go and have a look. Emotional market cycle, bottom top, accumulation. Emotional market cycle, bottom top, accumulation. So that's always statistically the area where if we want to go make new all-time highs, you need to hold. Go below that, things get bad. So to bring it full circle back to where we are with Bitcoin right now, if we look at this relationship and your C and the fear that you have for lower targets, look at the confluence between those price points and these fib levels for the larger term correction. So I don't know. What's your odds? What do you make of this?
For me, what I was just looking at, I'm just going to remove all the drawings from my chart. Is that, if you view my chart from there, is it any clearer right now or not?
I'm going to bring it up real quick. Let's quickly have a look. It's still exceptionally blurry. We can't.
Oh, that's a shame. I was just looking at your long-term chart on Bitcoin, and the move to the 69,000, if you measured that as 100%, it's very, very interesting if you ask me. So on a not on a log chart, you're probably on log, are you? On a regular?
No, I'm more regular. I only go log if I go past the previous 2021, because then you need log.
So just measure from obviously the starting point of Bitcoin.
Bring up my chart. Let's do this, and then I need to bring a different BTC. So you want to have a look at all the price action, correct?
Yeah. I mean, you can remove you can just clear all the labels.
Okay, I'm going to load this one. Sorry, guys, I'm going to jump through charts until I get the right color. It needs to load orange. Then I know it's the right one. I think it's this one. There we go. Okay, so here's Bitcoin, larger time frame.
So go to the monthly and shrink it so you can see.
And this is logarithmic. So there's log.
Oh, go to regular, not logarithmic.
Okay, let me just take out all the brush strokes. I didn't plan to load this chart. Let me just clean this. Sorry, I just need to clean the chart real quick. Give me a sec. Almost done.
You just go to the bin, can't you, on the left and clear everything?
Yeah, that's how I got to everything. Okay, there we go. So here we've got Bitcoin, and the red vertical lines are halvings. So just for everybody's sake, so you just know.
Yeah, I do that as well. I've got that on mine. So go from the beginning. So measure from 0 to 69,000 using your fib. So put your fib measuring tool.
Go from 0. So 0 on the price.
Go the other way around. Go from 69,000.
I'm at $30. I'm close. Nearest makes no difference. To 69,000. Okay, there I've got the fib, and then I'm gonna use the standard fib settings. And what do I need to switch on and add for you there?
1.618.
Okay, so I add 1.618.
Which is the golden ratio, the most important of all, really.
Correct. There's 1.618. Okay, and then mine is always, I need to put this on. So just like that, there we go. Right, there we go. Okay, so there's the 1.618, 100%. Okay, and then what do we do?
Okay, so you measured from 0 to 69,000.
Correct. I can probably get it a little bit more accurate when you guys click on the coordinates. This is just for the viewers, and you press that 0, then it will measure from 0, absolute 0 on the chart. So now we are 100% correct. Okay. And then what?
Just transpose it to the bear market of FTX low 15,000, whatever it was. Just transpose that same move measurement.
And there you have it there as well. Okay.
And then look at the price peak, 1.618, almost precisely.
So here you've had from 0 to 100 with a 1618. So we created the extension on this move.
Yeah. So basically, the market all-time high was just about almost precisely 1.618 times the move. So what I call the retail move to 69,000, all the retail investors. Then we got the correction down to the FTX low 15,500. Then the next move up was 1.618, the golden ratio times that first retail move up. So that's interesting. That gives me a little bit of room for concern about the movement down, that maybe this was just an ABC higher. Now, the reason it's probably not, or possibly not 1, 2, 3, is because the move down now has already overlapped the first wave higher, hasn't it, to 69,000?
Right.
We already dropped below 69,000.
Yeah, so if we were to try and count this wave-wise, I mean, it starts deleting the argument that we're still impulsing, because what can't happen is this can't be a 4 or a 2 or whatever you want to do, because we can't lose ground like this. We're starting into moving into corrective territory, which still doesn't mean we can't do an overextended B, meaning if we go A, B, C, you've got those versions. I think it's 123. Doesn't mean that we can't go make an all-time high, but it does mean that we're probably going to be going into a corrective nature more than an impulsive nature. Correct. That's the point you're trying to get to, if I understand.
Yeah. So whilst I labeled it downwards as basically ABC down from the all-time high, there are ways that you could label it, and this is why I say Elliott Wave doesn't give any absolute clear. It gives you basically frameworks on which you can base your trading, and that's an important thing, because there's no perfection, as I say, within trading, but it gives a framework, and we can count this. We could count it as 1, 2, 3 down so far, working on wave 4 and a 5th wave down to complete. If that's the case, then we then have a 5-wave impulse down from the top. Now, the potential then would be, if we have 5 waves down, we then get 3 waves higher. So we're still going to get a rally. So there'll still be some confusion, but it just wouldn't be a rally to new all-time highs. It would mean that the movement down is just part of a much larger ABC movement. So it still means there's no clarity. And that would probably actually fit better with the halving cycle that you just alluded to, in terms of when we expect highs and lows in the market. Because the scenario of a completed ABC down at the moment would be a little bit too quick for the halving cycle to then start to rise to a new high, a new all-time high. So it may be that this ABC movement that we've labeled down, or even a 5-wave movement down, is just a larger A wave. Then we have a B wave higher, then a further C wave down, before we then start to rally higher. So there's different possibilities, but the thing is, we can take both into account, and following the next move down, we should still expect a decent movement up, a tradable movement to the upside, whichever way you think, whether you're a long-term bear, bull, whatever, it doesn't matter. The next movement high, both interpretations on the Elliott Wave framework would give you an upward movement.
And that's what I like about it, because sometimes even if you're bearish, you have to be bullish for the bearish play to, the bearish scenario to play out. So even if you want this thing to go to 100, or say you want 10K for a BTC, that's your bearish target. If you understand waves, at some stage you have to be bullish long term for there to be a feasible rejection to warrant price to actually go to that area, to ask the question of whether is that fair price for a BTC. And yeah, so I like the interpretation that you've just basically shared with everybody, and I hope I've drawn it justice to a point that you guys can that I've drawn it what you were trying to say. You must tell me.
I just want to show that there are always alternates, and if we take them all into account, and if we actually get them confluence between alternates, on a particular move. And I think we both agreed from two different Elliott Wave perspectives and your different perspective from Wyckoff, and obviously looking at divergence, which we're hoping to appear as well, then we're going to have a lot of things pointing towards an upward move. Now, whether it moves to all-time highs or whether it's just an ABC move higher, it doesn't matter. It will be a substantial move higher that's tradable and could give us some really good profit. And that's why I say about protecting profits is very, very important. Sometimes, yes, you'll get stopped out, but you still take a profit. But at least, yeah, potentially, if you don't get stopped out, you could actually rise to all-time high and make a big profit. So I just think you got the best of both worlds if you trade cautiously. So many people end up getting wiped out, losing too much. And I've been trading for over 40 years now, and I've just learned that caution. But I mean, that looks beautiful, the chart you have there. Expecting another movement down. As I say, even whether it's ABC or 1, 2, 3, 4, 5, and you can actually see on your chart, by the way, a potential for 1, 2, 3, 4, 5 almost complete. You can see from the very top there, you've got a blue candle. A third candle was a blue one higher. The third candle down from top was a blue one. That can be a wave 2. And then wave 3 is the next move down, which you've got labeled A.
So basically 1, 2, 3, 4. Well, no, I've got it wrong there. That would be a 2 would be living in there. So you've got your 3. There was the divergence 4, and then
the 3 could actually be right the way at the bottom. Could be right the way at the bottom. So the 1 you've got in the wave 2, you've got as well. Yeah. And then you've got a 1, 2, 3, 4, 5, which is extended down to there. Yes. So the very low point is the 3. Then we're working on wave 4 now, and it could be a 5th wave down. That's
correct. That's what I'm looking for. That's just the play that I'm looking for right now.
Yeah. So we can label it that way, which is an impulse down, or we can label it as ABC down. But either way, the next move down should then give us a decent tradable movement up. So all I'm saying is, whichever way you look at it, whether you're a bear Elliott Wave or a bull Elliott Wave, they're two different scenarios, two different alternates, but they both result after the next move down, they both result in a decent tradable move to the upside. So that's why, that's what I'm looking for.
And here you can see it, just to support what Matthew is saying here, guys, is, people want to be bullish too quickly. So if you think about, the dump is over, so the fundamentalist starts telling you, you can see, look at all the absorption. We don't expect any more lower. But the technicals tells you what, at this stage, all we have is one pivot. That's all, one pivot. We need divergence. The market wants to make sure, and it's going to ask you the question, is this the bottom? And for it to be a bottom, we need to have that stress, that lower low in the market that then does not result in the market selling off and dying. It results in the price being bought back up. So normally the way that I look at divergence in relationship to these waves, to try and say, I think the wave is over, is that when you get to these areas, there's rules. That is resistance, because we do have a divergence, a pivot in the RSI. All that it means when I say pivot is the RSI went in one direction and it completely 180 to almost in the other direction. There's a pivot. So the market at this time in price had an opinion that this is a bargain. I'm buying. And then what the market does is it goes and stress tests that by doing the exact same thing and the RSI doing the opposite. And then that's the argument. These higher time frames, this weekly, will give you that. And where we're at right now, if we jump to where we are right now in price, there's a problem, because we've now had an initial pivot. So there's the move, but there's no divergence. There's nothing suggesting that this wave, this 5 wave, is done yet. Because until we get that divergence, meaning go make the lower low, do that, and have the RSI do that again, you're going to be in for what is probably the market moving right back up. Maybe I'll just switch to this setup so that the RSI doesn't hide the lines as I draw them. So you need that, and we don't have that. And the same then works for the upside. I mean, Matthew, that's why you look at when waves runs out. You'll have a high, you'll have your divergence, but you'll have the RSI clearly saying to you it's not supporting the move. Fall below that area, now you worry. And what did we do when we were at these highs? We did the exact same thing. We created divergence. So guys will say, oh, but you've got divergence there already. Yes, we do. But what did we not do? We didn't fall below that initial, pivot. What did we do there? We created more divergence. So yes, now you can say, okay, well, now this is the divergence, but we didn't fall below that pivot. But here we created again on the higher time frame, multiple divergences as these another three of the next leg, as these waves run out. And eventually you got the right divergence. There it is. And you fell below the support. That's why I sold at 125, because I was looking at these higher time frames and saying, okay, well, now we've got weekly divergences playing out. You need to worry. So until we have weekly bullish divergences turning price around like that, your larger sentiment would be there will be a relief rally, 80K or whatever the case might be. Maybe it's over where we are right now. I don't know. But the long-term play before we can be really bulls means that we need to get that divergence. So yeah. But that's it. Yeah. That's it from me, Matthew. Anything else you want to add to this, maybe, perhaps?
No, I mean, I don't think anybody could really go far wrong following the advice that you've given there. I'm in full agreement. Believe it or not, an hour has already passed, hasn't it? And I've actually got another meeting to head to. So I think this is a good.
It's always fun having you on, because I mean, guys, when somebody's talking sense. Matthew, I really appreciate it. Thanks so much for taking the time. Hopefully next time we'll have the screen clean and sorted. We'll make sure that we get the technical sorted out for when we do this chat.
It could be. You never know. I know you said internet, but we've got horrendous rain at the moment in Dubai. It's absolutely chucking it down. So I don't know if the rain could be causing problems.
It might be. And look, there's many things happening in the global economy right now and in the world that might be just preventing us from getting a clear screen. But thanks so much for taking the time, Matthew. Yeah. You have a lovely day. Cheers, buddy.
All the best. Bye-bye.
Right, guys, so I'm going to end off the stream real quick. And before I do that, first I need to say thanks to today's video sponsor, PrimeXBT. You can trade Bitcoin and everything else on PrimeXBT. So if you want to trade with me, what you can do is just open an account using the link, deposit your money, trade. And I will give you access to my proprietary private indicators and give you an opportunity to play around with this, because by now you would see how my buddy indicator overrides and gives you an edge on how to look at the market by giving you a trade analysis around this. And in addition to this, what you can do is some of the things that I'm being pointed out to that might be looking interesting for another trade could be sugar, because what we see now is with the rising oil prices, what's going to happen is the cost to manufacturing of these things are going to start skyrocketing, and you're going to get charts like sugar and all these breaking to the upside, just like we had with oil. And so there is a lot of swing, larger time frame swing opportunities. I mean, we can load probably any oil chart in there, but there's larger swing opportunities for these as well. That could see this is the wrongest oil chart to load. Let me just click on the right thing here. let's get the right chart in there. There we go. So what we're getting is that all these pairs are going to start seeing the same kind of knock-on effect, because this is now starting to get priced in on that. So keep an eye out on that. And then this afternoon we're going to have another stream with all the other trade buddies of mine. So we're going to have a look at some altcoins, some education, and so forth. So make sure to tune into that one this afternoon. And then a last little shout out, Tangem. They contacted me a while ago and actually sent me a hardware. So you can get a cold wallet that you can load on your phone, but it's quite cool, I have to say. You get these little cards, that you scan, and this is the key to your wallet. So you don't have you still have the normal seed phrase, but now you have these little cards that you can use to secure your wallet. And the nice thing is your coins and everything that you store in your wallet. Let me just open the app. Let me just get there. You can actually use that and use your smartphone to tap. So here it is. Now I need to scan my little card, and then I can log into my wallet, which is quite nice. I have to say, I quite like that. Come on, scan. Okay, let me just get my phone. There we go. It's scanned. So now I'm in my wallet. Now I need to access and enter the code it sent me. A90. Just give me a sec. There we go. Sorry, now I just need to scan the right card. Didn't really plan for this, but it's a really cool cool tool. And then I can actually pay with crypto using my smartphone as a tab. So have a look at that. I have now, there we go. I've got my, keeps on asking for the wrong code. I'm sorry, guys. I just now need to pick the right card. But in any case, then you can use your smartphone and actually pay with USDT, whatever coin you have, and they will do the back-end transaction for you. So it turns your bags into a wallet as well, which I quite like. So what you need to do is just check in the link. These cards go for, I think, $50 a set of cards. I obviously didn't pay for mine, guys. Okay, I got mine for free. But if you use the link, you get 20% off, the link that I've got, plus an additional 10% on that. So 30% off, so it's like $20. And they do have different colors. I'm actually looking at getting a nice light green one. So you can have a look at the various colors that they do have. Let's do this. So you can customize yours and so forth, your key cards. So it's quite cool. And they have a ring as well, which I'm not so much so for ring, but now your wallet, your key is a ring. So that unlocks your wallet. So if you use the link in there, you get an additional 10% off. So it's like $30 for your set of cards. And that's it. So I'm going to play with this. I'm going to use this for a little bit longer. The link's in the video description, guys. So go and get the discount should you want to play a bit with this. And the cold wallet, this is the nice thing. If you just want to try it out, just the wallet is completely free. So you can just open the wallet and have your crypto stored in there. Company's based in Switzerland. Well, do your own research, as we all do. I do my own research as well. But yeah, I'm really happy and I quite like the thing. It's just now a pity. I wanted to unlock it while I'm live with you guys, and now I'm stumbling over my cards and everything. But there you go. Guys, you have a lovely day. See you this afternoon. We're going to be looking at that. And we're going to be looking at more coins. And then I'm going to be more altcoin heavy. So we want to be looking at, when will OP maybe have a bounce to the upside, just as an example of many of these coins, is because the play and the common sense there is that Bitcoin has been stealing everybody's thunder. And if we're moving in larger term from corrections, it means that the desire for Bitcoin and the need for BTC long-term is going to slow down a bit. And the interesting thing is, I've been saying to you guys, if we go to the charts I've been sharing in Discord for everybody, if we have a look at the spot charts for some of the alts, they all have gone through these crazy accumulation scenarios now, long-term lateral ranges and so forth. So the play is that it might be that the next cycle will be an altcoin heavy cycle. Not every altcoin, but an altcoin cycle that could see price move on. And I mean, we were looking at, I still think ETH can maybe go to 2.8 and these kind of things. So we're going to discuss these coins and a lot more this afternoon. So LTech codes, see you a little bit later. Metals, look, gold had a crazy drop. It's a funny thing that happened with gold. So, I mean, let's quickly see. S&P 500, I mean, there's definitely a rotation happening in there. But a lot of ships would need maintenance. I just caught the joke now. There we go, man. But I mean, gold went down. If you have a look at gold weekly time frame, this is a crazy play. There's a typical blow off. I mean, if you look at the relationship, let's maybe do this the same way Matthew would have done it. So there's your 100%. And then if you move that over, I mean, look at that 618. We went way higher. We probably went to a 2618, or even, yeah, there we go. We went to a 2618. Now, previous alt seasons, you would get a 4618, guys. This is when everybody was raving. Oh, look at how I've 10x my gems, but the retrace relationship still remains. So if we look at gold as an example, once you have the entire move, you go back to the golden ratio, the relationship between where statistically the market's going to find a move, okay? And your 23.6 is the way I've got it marked out here, is the same as the 887 if you were to flip this, use my long-term flip. So it means that if we look at this entire move, these levels are still in play for a big bear move. So I don't want to short these metals just yet. I don't want to over analyze the market and say that that's the worst, that's where we're going to go, but it's definitely going to be moving into crazy time. Now I see Altec is talking about silver also now being able to be traded on Bybit and Hyperlink, and those things. One thing that I want to say why I like trading these on Prime XBT is because they've got deeper order books. So I've got my crypto exchange where I can trade my crypto coins, my majors, not the micro coins. That's Bybit's way better at doing that again. But you can get gold, silver, all these metals and indexes added with a deep enough order book so you don't have all the crazy slippage. Okay. Same thing here for the S&P 500. If we have a look at this price action, we do that same little exercise from melt down to height. Let's do that. 0, 100. Okay, and we move that over to where we are right now. Okay, what do we have? The potential that the stock markets can still be wrong for longer than people can be right. So there's still the potential that the S&P could go to a higher level. I mean, if we move this back down there's 100% measured move. We are moving in the same way. And then we went to close to the 618. So if I do that same relationship here, 100% on our way to 618. And if you look at that as 100%, there's confluence. So saying that because we're correcting right now, it's over, would be almost irresponsible because we don't have a confirmed bear trend on any of these things yet. And if this then rallies, the argument is that gold could still go ballistic and make a higher high again, just to be that blow off top. Because what do you have? You've got years, a lot of years of accumulation, effort versus result. That's the law. And let's go monthly time frame with any of these things. That's the law of supply and demand dynamics. Okay, there you had gold. You've had it from 1980 being in a ranged environment, breaking out, testing that range. All that accumulation has to move in. And eventually, all that gains, once the market now starts becoming comfortable, and everybody kind of has an idea where they want to go, there might be that move to the downside. So it makes for an interesting trade dynamic because we can make money on both sides of the market. So that's it. Right, guys. So see you guys this afternoon. As always, do your own research. Go check out Tangem. Quite cool. I have to say these cards are seriously proper, cool looking cards. Let me show you guys on the video. Seriously cool looking NFC card that you scan. You put it in your wallet, which is what I'm supposed to do. I still have mine. And then when you use your phone, you can literally then tap that. Not all the jurisdictions have access to the paid function. Everybody can use the wallet section. So read through the terms and see whether your country allows you to actually pay with your crypto. Sadly, South Africa doesn't have that just yet, but they say that it's coming soon. So within the next few weeks, according to the communication that I had. So I'm looking forward for that. And then, yeah, make sure to use the link to get the discount, guys. Additional 10%. And that's not a bad deal. Right. Cheers, everybody. See you this afternoon.